Joining us now for more reaction is the founder and CEO of Architect and former president of FTX U.S., Brett Harrison. Brett, welcome to the show.
Hi, thanks for having me.
All right, first we want to get your thoughts on what we've just been talking about, the SEC reportedly saying recent filings to launch a spot Bitcoin ETF are inadequate. What do you think when you hear those comments?
So it's natural that with these applications mentioning that they finally have a surveillance sharing agreement with a regulated market of significant size in the underlying asset, in this case Bitcoin, that the SEC is going to want to know who is that surveillance sharing agreement with. And of course, these applications got refiled with Coinbase mentioned as the underlying. To an earlier point with SIBO, SIBO has multiple different exchanges. They have, of course, their equities exchanges, which they received when they merged and bought, BATS Y, EdgeX, EdgeA, which lists normal securities like Apple and, the S&P 500 ETF SPY. And so the SEC has full jurisdiction over those exchanges as national Form 1 securities exchanges. They also have their futures exchanges for Bitcoin, which they received when they acquired ErisX, the DCM regulated by the CFTC. So SIBO is sort of, as an organization, they have inroads into the SEC and the CFTC. Of course, the principal issue here is, given that there's been a futures ETF approved, for example, the Bitcoin future as the underlying coming from the CME, and the SEC determined that there was enough surveillance sharing agreement in place with CME to regulate Bitcoin futures, but ultimately the Bitcoin futures are settled by the underlying spot markets, which of course reference Coinbase. The question is, if now the ETF is directly referencing the Coinbase Bitcoin market and has a surveillance sharing agreement directly with Coinbase, will that be adequate for the SEC to approve these ETFs? And of course, many people are saying it should be. It's sort of arbitrary for the futures, but not the spot markets to be approved in this case.
But nonetheless, I mean, do you think that knowing the SEC the way it is, do you think that it stands a chance? I think that's a big question that everyone has here.
I think it does. I think the question is whether ultimately, if the SEC wants to, put up the fight and say, I'm sorry, but BTC on Coinbase is not a significant enough share of the market to prevent manipulation, especially given what a large percentage of the Bitcoin price is driven by non-US markets, then, they can of course take that position, and then it's up to the various ETF issuers to either, to withdraw, to follow up again later, to bring lawsuits, which of course, several ETF issuers have already. And so it's sort of a wait and see, and the ETF issuers are completely at the mercy of the regulator here.
So how would that compare, for instance, with gold or oil, which have significant overseas presence? Are the prices move significantly with those commodities outside the United States?
I think that's an excellent point. So, in the U.S., we have two markets regulators, like the SEC, which regulates securities, and we have the CFTC, which regulates commodity futures. But we do not have a clear markets regulator for spot commodities. Now, the CFTC does have, anti-manipulation, anti-fraud authority over spot commodity markets in the U.S., but they don't have markets regulatory authority over spot commodity markets. For example, the spot gold markets, or even things like, spot currencies. Yet there are, for example, ETFs like the GLD Gold Trust, and there are, ETFs on spot currencies as well, which of course are affected largely by, trading in international markets, most of which is unregulated activity or certainly not regulated under U.S. regulatory authority. And so that does bring up this interesting question of, is it arbitrary that the spot Bitcoin ETF cannot be approved when these other spot commodity ETFs, regardless of how they've been structured as a trust or otherwise, have been approved in the past?
Do you think that the SEC is in general acting a little too arbitrary here, or do you think that they're being cautious? Do you think that they're being properly cautious with not just this situation with the ETFs, but also with their lawsuits involving the likes of Binance and Coinbase?
I think the SEC is taking the position that, their primary goal, as they should be as a regulator, is to protect investors. It's to make sure that especially retail investors are protected. Of course, the question here is, given the still unbelievable international and domestic interest in getting exposure to crypto as an alternative asset, especially in large portfolios of institutions. What is the safest way to allow investors to get that exposure? Well, if you're concerned about, the existence of exchanges and how they are properly surveilling their own assets and custody, given everything we've seen in recent weeks, turmoil of other companies that have obviously gotten in trouble about custody, an ETF feels like one of the safest, most secure, and most highly regulated vehicles to give retail investors and institutional investors access to the spot market. So certainly I would think that if the goal is to have investor protection, given how much interest there is in getting exposure, that ETFs seem like the right vehicle to achieve that purpose and bring it under SEC jurisdiction, and therefore would be in their best interest and investors' in best interest to approve it.
It feels like we have two narratives at play here. The ETF narrative seems like a very positive one. And then we have the rest of the industry, which is really under the magnifying glass from the SEC. Do you think that this legal action poses an existential threat to crypto in the US?
I think that perhaps there's a very US-centric view of the crypto markets. And from all of the different potential clients of our company that we've been talking to, many of which are not in the US, the sentiment outside the US is still quite positive. I mean, we have jurisdictions around the world that are actually coming forth with significant either new proposals for regulatory frameworks or rules that are going to be able to allow businesses to exist and thrive in those particular regimes. And we think about Hong Kong, Japan proposing various rules to help ease tax burdens on people who are launching tokens. Obviously, in the UK, lots of recent news. EU with MiCA. And so I think that while, of course, it's troubling in the US to see a lot of the recent regulatory action taken against players in the market like Coinbase that are certainly walking the direct path to trying to be a regulated business in whatever way possible. Outside the US, I think businesses is thriving, and in general, the sentiment is positive.
Would you consider moving your operations outside of the US?
It's important for us to maintain operations in the U.S. We think that whatever temporary issues there are with markets and exchanges and crypto companies in the U.S., we think over the long term, if you look at everything from BlackRock's interest in a Bitcoin ETF to individual banks talking about working on private blockchains, testing out different kinds of tokenized assets, different tokenized versions of real-world assets. I think we're in general quite positive over the long-term sentiment for crypto in the U.S. However, we inherently want to have a global operation, which is why we're continuing to expand to places outside the U.S. We're serving customers outside the U.S. as a software company, but our operations we are going to continue to run in the U.S. and we're not moving.
What do you think about the future for native crypto exchanges? I know we're sticking in the US here now that CBOE, CME, and EDX markets are gaining more traction.
I think you're going to see probably three kinds of exchanges that are going to continue to coexist and pick up steam over the next, call it 2 to 5 years. You're going to have your existing models, for example, Coinbase, where you have this vertical clearing, settlement, and exchange matching all in one. And there's a question of, can that exist only for spot commodities like Bitcoin that are sort of outside of the regulatory authority that currently exists by the SEC and CFTC? Or will those be able to include other kinds of tokens as well, or even sort of security-like tokens? Digital asset securities. That's number one. Number two, you will see exchanges that will take a different approach, which is to model themselves off of traditional securities market structure. So, for example, EDX is a good example of where they've very carefully separated the clearing side, the custody side, and the exchange matching side. Of course, that also flies in the face of a lot of what crypto is supposed to represent, which is a compression of these roles into one to bring down costs and produce operational efficiency, having real-time instantaneous settlement. That's sort of the purpose of a blockchain to begin with. And so people are going to want to prefer one versus the other. And finally, you have DeFi, and the growth of DeFi will continue. It's a question of to what extent that can exist in a regulated fashion in the US. or whether, U.S. people are going to be cut off to access. But I see those three exchange types continuing to exist and grow and thrive within the U.S.
So speaking of exchanges, obviously used to run FTX U.S. and there's talk that FTX might restart. What do you think the odds are of it getting off the ground? And kind of where are the valuation? What's the value added that a restarted FTX would bring to the market? The name brand itself is obviously an issue, right? It's really hard to convince people to say, you know what? Yeah, you put money in FTX before. This didn't work out for you, but here's FTX 2. Why not put money in that? Or would they have to rebrand? What's the technological underpinnings that you think would be value added here?
So there's a lot to unpack about the potential possibility of a restart. And without, particular insight into what the existing plan would be or who the potential bidders are, it's hard to say what the odds are of it succeeding. But to talk about some of the issues at stake here. So first, of course, a rebrand is obviously going to be necessary. I think most people agree on that. I think technologically, there's a question of, to what extent does the existing infrastructure need a complete revamp in light of now everything that we know has happened with the people running the exchange? Or can it actually be taken as is, patched a bit by, a large team of experts and then just kind of restarted wholesale? And, I think the prospects of restarting have to do with the fact that the reason why, in my opinion, FTX grew so quickly in the beginning was because it brought together some truly, novel combinations of concepts to derivatives markets. It's brought, real-time clearing, real-time margin, 24/7 direct-to-customer derivatives operations. And that was a very powerful concept, and it was the reason why many institutions around the world were trading on FTX, preferring that over other kinds of markets. It's why it was such a significant moment when FTX U.S., really with Ledger X, which has now been sold to Miami International Holdings, it was such a significant moment that it was trying to bring that direct to retail, direct margin model to CFTC regulated derivative markets. And I think if that can be restarted, I think that's a very important, market structure concept that should have a chance to exist. And finally, I think that people would like to see, of course, the customers repaid, myself included as one of them. And I think the possibility of restarting the exchange when it was a significant, revenue earner as a company, could be very helpful in bringing, more assets back to the exchange to be able to distribute it back to customers to make them whole.
Have you spoken with Sam Bankman-Fried recently, or what's your relationship like with him now?
I haven't spoken to him, in close to a year. I mean, since, obviously I talked very publicly about kind of the falling out we had while I was still at the company. And at that point, Sam was barely speaking to me from within the company. And, since I formally resigned, we haven't spoken at all.
I guess on that note, what lessons have you learned since working at FTX U.S. that you think are kind of relevant for the rest of the industry to hear?
I think, working at FTX U.S. and having, an unbelievable team under me, I think that the lessons are that this industry is going to thrive. It's significant. There are many players who do believe in the long-term viability of cryptocurrencies to revolutionize financial market structure. And there are many passionate individuals who are going to be helped to make that happen with really incredible resumes, prior to joining the crypto industry. And I think it's important to not see the short term of even what we're seeing now with the regulated, regulatory environment in the US, to think long-term about how do we build a lasting, sustainable industry that enables both institutions and retail to thrive in a way that, of course, protects investors, but also enables the new promise of this technology. I think that it's taught me and the people that I work with that this is an industry that is worth sticking with and worth building in.
I guess that's a great segue to your new platform, Crypto Infrastructure Trading Startup Architect. You're using AI, you're using the lessons you used from FTX U.S. to bring this to life. Tell us a little bit about how you are incorporating AI in Web3.
So our company Architect, it's a software provider that enables seamless integration of trading across a variety of different markets, from centralized crypto exchanges to decentralized protocols to OTC liquidity providers to regulated derivatives exchanges like CME and CBOE. And part of what we want to do is lower the bar for institutions and individuals to be able to enter the kind of professional trading space, especially when it comes to algorithmic trading. And as one feature of our product, we absolutely have been exploring uses of AI, especially recent advances in LLMs, to lower that barrier to entry. And so, for example, one of the things that we created for our first product is a way for people to enter natural language instructions for a potential trading algorithm that they want to execute, and have Architect creates code using OpenAI that enables them to kind of jumpstart and get a working piece of code that runs a trading algorithm using Architect's internal APIs. And so we're excited to look into a number of different ways that we can help seamlessly trade across all these different exchanges. But certainly AI is a way to help reduce a lot of the initial start to get over the boilerplate of writing code to be able to trade across these different venues.
Some have said that AI could be the catalyst in getting us from Web 2 to Web 3. Do you agree with that, or do you think that it's a tool, like you're explaining, that may just help us develop some of these things faster?
I see it more of a tool. I think even within our company, we are using ChatGPT every day to kind of assist in our own development efforts. It's an incredible tool. It's kind of like having an intern and a mentor at once with you all the time as your companion, helping you code. I think it's just one tool in the toolkit. And I think it's important that people not get too distracted in thinking that AI is some kind of panacea for all potential issues in all technological areas.
Brett, thank you very much for joining us this morning.
Thank you so much.
That was Architect CEO and founder Brett Harrison.